everybody, my name is Rainer and welcome back to this week's market analysis. So I'll say periods like this is actually tremendous opportunity for trend followers because you see price making multi-year highs, multi-year lows across the board, from crude oil to the DAX markets, the sugar markets. So this week I'll be looking to cover quite a few markets, mainly commodities. So I'll be looking at crude oil, we'll look at sugar, we'll look at the S&P 500 and followed by the British pound dollar.
So this is the weekly chart of crude oil, and you can see price did this strong parabolic move towards the downside. Then you see this slight retracement, and over the last 2-3 weeks you see price of crude oil coming down once more. So looking at the daily chart, right? Let's look at it. You can see that price has broken down over this key level, right? This key support level over here. And if you ask me, all right, I seldom make prediction, but I'm just predicting that price will come back and retest this low over here. And if that low doesn't hold, it probably, head down lower, and, I would look to get short, and this week is where I look to get short. So opportunity-wise, right, before we look at opportunity, let's look at structure of the markets. This structure of this crude oil on a daily perspective. You see, going back, price of crude oil has fallen, right? Fallen since I think it was 120. Then on daily chart, you see there's this. The red is the 20 period moving average, blue is the 50 period, and price has been respecting it for quite some time now. All right, has been respecting the 20 more than the 50, if you notice, right, from this period over here until here where it finally broke out, but still it was contained within the 50 period moving average. So nonetheless, this zone that I've highlighted out still holds. And the key thing for me this coming week was actually when price broke out of this support level over here. So chances are, right, chances are price will come back and retest this low over here and may even break it. So I'll be looking to short this week, and here's how I'll look to play crude oil. Mind you, this is the WTI and not the Brent crude oil, okay? So don't get mixed up between the two. So on the 4-hour chart, let's look at the 4-hour chart. You see crude oil, clearer support, right? Okay, you don't see a support is clearer down here on the 4-hour. Price broke below it. And here's how I look to play it, right? I look to trade a breakout for crude oil towards the downside, and I anticipate that there will be a potential bear flag pattern coming up this week before trading lower once more. So I'll be looking to sell at this swing low over here and have my stops about 2 ATR, and I'll watch if price does take out the multi-year lows, and I'll plan my trade along the way. So this is my entry, this is my stops. I usually risk less than 1% or 1% of my trade, and as price goes lower, I'll manage it accordingly, right? I can't really decide how I'm going to manage this trade now because price has not even, triggered my entry. So there's quite a few ways I will usually manage it, but I only start to look how to manage it after price trigger my entry, goes in my favor. Then I look at the structure of the markets and see how I trail my stops accordingly. So up next, let's look at this market, all right? This market, nobody talks about it, right? Very hidden away from everyone's radar. But nonetheless, it is sugar. And one thing about sugar is that it's only open during the London session. So do take note of it. Unlike the foreign currencies where it's open almost 24 hours a day, sugar opens only during the London session. So I think it's open from a London open to London close. You're looking at about 8 hours that is being open. 8 to 10 hours. I can't really count, okay, but it's about 8 to 9 hours is open. So do note that, it rests during the Asian session. And don't be surprised that it's not moving because it's actually closed. So yep, that's a little background, fundamental knowledge on how sugar is run on the exchange. And let's look at it on the weekly chart and let's analyze it. So on the weekly chart, you see since this is 2011, he has been making lower lows and lower highs. It's very obvious, right? See, lower highs, lower highs, lower highs, here, 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 and recently over here, right? You can even draw the lower lows over here, right? Here, here, here. Here, I'm sure you can see it's pretty obvious, right? There's no room for debate that sugar is in the downtrend. And what I'd like to share with you most things is that, how traders will actually look at this chart, right? A lot of traders, institution and traders are like, they like to long at support, right? Especially when the support comes into multi-year support. Say, for example, here. This is a strong multi-year support. I agree. I can see that too. Everyone can see that, right? Those people who likes to, I say corporations who want to hedge their price against sugar, they're long sugar at support, right? Traders who place support and resistance, they're long at support. And yep, there is definitely a cluster of stops below this swing low over here and here. No doubt, a lot of traders are going to put their stop loss below there. And for me, I happen to do the opposite. I don't long at support, I short at support. That's right, I short. Alright, okay, sorry about my spelling. Short into support. Previously, I was like most traders out there, I long into support and hope price bounce up, Sometimes it did, sometimes it doesn't, right? That's trading. There's no right or wrong whether you're long into support or short into support. But for me, from a trend following perspective, I short into support because you look at it previously, support has always been broken most of the time, right? Over here, then we have this support over here. All right, we have this test of support for it really higher before it comes down lower again once more, right? Then we have this support over here, this false breakout before it goes higher. Then we have this support over here, traded lower before it traded slightly higher, then come back, retest once more. So right now we have this support once more. So chances are price could possibly break below support, come back, retest, and go down once more. So that is not my concern. I don't know how price will actually trade. I don't know what's the structure that is going to follow of this market, whether it's going to break below support, does a false breakout, blah, blah, blah. I really do not know. All I know is that I'm looking to short, I'll manage my risk, and I'll see how this trade goes. So now that you have this background idea of traders looking to long sugar at support, right, then you should understand that if I'm going to short into support, I'll be challenging going against traders who are going long at support. Those are probably the hedgers, corporations who hedge, big time traders from institutions who look at technical charts and long into support. Yes, my decision is going against traders like that. The only thing going for me is that, two things, right? First thing first, their stop loss will trigger a further downslide into the market. As you can see, let's look at the daily chart, right? Daily chart, you can see here. This is where most traders will place their stop loss below this low over here. So if price does trade below this low over here, price would have a tendency to push out even lower because that's where all the stops are. Stops will get triggered. And in fact, I got short over here, right? Over here. So you can't really see down here, but let's go to the forward chart and see where I shorted, right? I shorted when price took out this swing low over here. My stops are somewhere around here, 2 ATR, and price did traded lower, retest higher, and came down lower as what I initially anticipated, right? Where traders place their stop loss down there, it will get triggered. So right now, I still left my stop loss originally where it is. I do not know what will happen in the coming weeks. Price could potentially, go back all the way up, and stop me out. That could be possible. Or likewise, price could trade down lower in the coming weeks or into the months and, does a massive downward slide in sugar, just like what we saw in crude oil. That could be possible as well. And the only thing I know going for me is that, I'm together with the rest of the trend followers in the world, those hedge funds. I can almost guarantee you that they are short as well. They always short into lows in the market. They always long into the highs of the market. And I won't be surprised that those trend followers, those trend following hedge funds are actually short as well. So I have that going for me. I'm with them, and we probably have our stops. We have our stops set in place, and we'll watch what the market does. So that's something on sugar I'd like to share with you. And next, let's look at the S&P 500. Recently you see on the daily chart, you see a lot of news. They are talking about the correction coming up. We saw this downward slide down here over here. But let's look at it from a longer term perspective. Let's look at it from a macro view on what the S&P is really doing. This is the weekly chart of the S&P. And if you're a longer term trader, right, you are someone who is holding, maybe you're an investor or something, I wouldn't even be bearish at this point of time from a longer term perspective. You look at price, it has been respecting both the 20 and the 50 period moving average for quite a while right now. And I will only be a cause of concern, or only look to be short, right, if price does take out this swing low over here, right, as well as close below the 50 period moving average over here. So only then, perhaps I'll consider going short. But right now, I will probably stay out of the market. There are better indices to short like the DAX, but I just want to share with you that, looking from a longer term perspective, the S&P 500 is nowhere near a bear market, right? Possibly just a correction coming down lower, may retest the swing low, retest the 50 period moving average, and possibly go up higher again in the coming months. I don't know, that's just my guess, and it's just something to share with other stock traders out there who have a view on what the stock market is doing. My longer term view is still bullish until, like I said, taking out this swing low and the 50 period moving average. If price does close below it, then only would I be, considering looking to short towards the downside. So that's my take on the S&P 500. I'm just predicting. I'm usually wrong most of the time, so take everything with a pinch of salt. Proper risk management, alright, know when to enter, know when to get out, trade the trend. That's key to successful trading. Moving on, let's look at the British pound dollar. Something that also caught my attention, right? The pound dollar compared to the euro dollar in terms of relative strength, it's not as weak, but over the last couple of weeks, it has shown a lot of weakness. You see that this two bearish momentum candle, this one and this one towards the downside, and euro dollar didn't even exhibit such weakness over the last couple of weeks. So the pound dollar is something that caught my attention, and it's something that I'll be looking to trade as well. And here's how I'll be looking to trade it. Let's look at the daily chart, right? We see price once again, respecting this 20 and 50 EMA the zone, right? We have this fake out over here where price break out the 50 before coming back down lower. And that's trading, nothing is pitch perfect, It's not going to respect the line to the tip, and then bounce off, There are times where, it's going to breach off, full most trader that's it's a breakout. Then what it does is actually a false breakout, then come back lower. That's just trading. This is normal, accept it. That's what happens all the time in the markets. It doesn't respect to the pip, right? Rather, it's a zone, and give the zone a certain buffer, before you tell yourself you're wrong and get out. So looking at pound dollar, daily chart. Then this daily chart, you see that price took out this multi-year low over here, right? So you can be sure as well, multi-year lows, there'll be traders looking to long down there, place their stops below it, and what we got was a trigger of stops being triggered over here, right? So price traded lower, and I'm looking to short as well. And here's how I'll be looking to short pound dollar. Look at the forward chart. There we have it. We see price respecting the 20 EMA, right? Didn't almost touch it over here. Didn't almost touch it. Almost touch it over here. So I won't be surprised if price come back towards the 20 EMA, right? Right, that would be a potential level I'll look to short. Likewise, price could also potentially do a I like this pattern, bear flag, trade it lower. I'll get my sell stops below this low over here. So potential trading setup on pound dollar as well, and something to keep your eye on. And as usual, I always say this, I always mention this a lot. I always emphasize on this: risk management. Risk management. You can have the best trading system in the world, or something which wins 80 or 90% of the time, but if you are going to risk atrocious amount on each trade, like 60 or 70% of your account, it's only a matter of time before you blow it up. And what more of a trend following system who only wins 30% of the time? All the more you have to even reduce your risk to a comfortable level whereby you can take loss after loss and still execute your trades consistently. That's key to trend following. And for me, I risk no more than 1% a trade. And this is something I'm perfectly comfortable with, and you have to find a figure you're comfortable with. Some people could be 0.5, 0.3. Lower it if you have to. Lower it if that's the only thing that will keep you consistent in your trading system. You have to lower it to the level which is you're comfortable with and you can execute consistently. So risk management is paramount, and it's something that I don't want you guys to forget. I have been putting out quite a bit of trade calls, not that I really want to, but just to give you an insight into my thought process. And if you're just blindly following it, those trade calls I give, and putting a enormous risk on each trade, I can lose 10 times in a row, I'm still in the game. You lose 10 times in a row, you busted a few accounts. It does not make sense. So risk management, guys, do not forget it. Risk management, alright? So that's all I have for you guys this week. I hope you guys enjoyed it, because if you do, feel free to hit the subscribe button below. Any comments, can leave it on my website, on YouTube, and I'll talk to you soon.